Welcome to Trade the MBI and an ongoing education of the unique indicators that we've created here. My name is John Morgan, and I'm going to run you through exactly what I've created here. This happens to be a chart of the S&P 500. The date we're looking at is just before the start of '09. And what we're going to go over for this YouTube video will be the extreme histogram, which is represented by these lines as you see them over price. And let me go to a more updated chart here. And this is a close-up of the same period of the extreme histograms. And what we look for is a simple breach of this red line here, which happens to be at a -60 reading, and the cyan line here, which is a -50 reading. Now, each of these gives us a little bit different clue as to what we're looking for in a market condition. When I created the MBI, which happened to be the white candles right here that appear at lows of the market, I found it more helpful to know which ones were likely to suffer retraces to the same levels, and or ones that were free to just continue to climb. In so doing, came up with this indicator. It's about 250 variables by itself, and what we look for is breaches of the red line. Right here would be an instance that happened in late November, and what it tells us is that the low that took place at this particular day is likely to be retraced, and as you get a continuation of these lows, at a certain point you get an increase and a rise. And if a low has not been taken out at that particular point and the move back above this red line, then we know that this low is likely to be retested. Now, in this particular case, I can slide it all the way up here and give you the reading was -67 on that day. So this low still needs to be reached. And what we can do is we can go ahead and bring in a little line and just go ahead and apply it there. And that corresponded to the low around 741. Gotta go up a little bit right there. But if we come across in time, you can see that even though price was rising, we knew that we were going to get a retrace back to these levels. And then as we approached the beginning of '09, we ended up dipping below them again. And price then bounced off that particular point and did not test the lows over here as well. And so we can continue to draw another line of that low that has to be retested. So as price came across, we also can look at our histogram from the standpoint of when it peaks or reaches near the positive level, it gets to extremes. And as soon as it reverses, it can be the end of a trend, doesn't have to be. And in this particular case, though, this quickly after having breached the red line, we're looking for a retrace below that level. And lo and behold, it doesn't take long for that to take place at the beginning in January of '09. As price made extreme lows. We do even have an extreme of the extreme, which would be in the -85 category. That's getting into real significant depressed price, and at that particular point, it actually becomes an automatic buy. We actually achieve that level. Well, it's right about here, -85, where it says differential, just below the bottom, and you can see that price continues to make new lows and retrace. And then the histogram begins to rise even though the lows are being retested. All the way over to here, we end up same lows, but a much higher histogram and above the red line. However, we still have a lower level that needs to be retested. And we continue to move across in time, and sure enough, it took from, well, till middle of February. But even within that time period, we had clues and were able to utilize the other indicators to give us a bead as to exactly when we need to be thinking about shorting into these higher moves and or selling and taking profits off of quick runs. Particularly with these MBIs right here, we knew that the success rate on a long run was going to be low because we had to retest these low areas prior to doing so. And in fact, we knew that on a break of those lows, likely to head down even further to our previous low. But then we make those lows on, you guessed it, even lower histograms. And so this was a very unique time period where more people really didn't know where the end was, and it really had nothing to do with the technical analysis as much as what players with the actual money are doing at that particular time. And that became more relevant than previous supports or everyone's idea of what support really was. And you can see that we continue to dip below the red line, and then all of a sudden the histogram started rising at the beginning of March above the 50 line, which is a very bullish place for price to be at the time we were making lows in early March. And you can see the rise in this particular case is not encumbered by the fact that we have to retest a low, and in fact is able to climb of its own accord. Now, how do you know when a climb has had too much? Well, that becomes even an easier read, because what we get is an extreme histogram reading where it turns positive. And in this particular case, the positive reading reached all the way up to 9.8 here. And what we look for is the beginning of these histograms to stop making the higher highs. And if we go ahead and put the low there, that usually becomes the beginning point at which we expect to retrace. And then what we look for is our first move lower on the histogram after we've had a series. You need to have at least two of the upper histograms before an expectation of the retrace. And here we have two back-to-back higher histogram. Now, we expected the lows to be retraced in this particular point, and they were. And going forward, we expect the same. And it only takes a little bit of time, a little bit of patience, and you have a very clear definition of where your expectations for retraces can be using the upper histogram. This gives you a little bit of it. I think in the next part we'll go over a little bit more of contemporary time, like the flash crash, and see if we can gain some unique insights using this extreme histogram reading to better gauge where the market is likely to move for us. As always though, trade well.